Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the running return on investment, or ROI. My voice sounds a little bit weird, probably because I've been talking all week to people in Miami. It was great if I met you. Hopefully, if I did not meet you, I will meet you next year. Let's go ahead and jump in. So, the running 30 day is where we are going to start. Then, we're going to systematically step through various time frames so you can see as we look at longer and longer time frames, we get a bit more expected or predictable results, I should say. Now, when you look at the 30-day ROI, one of the things you'll notice is that it's all over the place. And one of the things you can look at on the secondary y-axis is the ROI on a logarithmic scale. And you'll notice that even on the 30-day ROI, we can still occasionally experience a 2x in the return on investment of Bitcoin. It actually happened back in January of 2021. Previously, the time that that had occurred would have been in December of 2017. This was another example of how overheated we were back then. It did not stop us from going up a little bit higher into our final distribution phase in early 2021. But looking at these charts, recognizing the next time we see, say, like a 2x in only 30 days, if and when it happens, it should be a sign that the market is getting somewhat heated. Now, we can systematically step through. We can look at the 90-day ROI, and this line here at 1 represents, basically break even, of course, not including inflation. What you'll notice is that we do tend to spend a majority of our time above 1. However, there are phases where we do go below 1. And one of the things we've mentioned in this current market cycle with Bitcoin is that we have these sort of like mini bear markets that can last 3 to 6 months at times. And one of the ways that you can actually visualize this is by looking at, in fact, the 90-day ROI or 3-month ROI of Bitcoin. And you can see that back in the summer of 2021, the 90-day ROI went down to about 0.52. And then most recently, it went down to about 0.6. You can see there's a lot of previous times where it went down to these levels. And one of the times when it went down to this level was actually back in the end of 2018. Now, if we continue to do something like that, like if we come back down again, then obviously the price will be lower because we're comparing it to a different reference point. But it's important to recognize the 90-day ROI because I do believe it can provide some insight into the market, the asset being exceptionally oversold. Now, if we go look at the 180-day ROI, you can start to see that a lot of the noise really gets drowned out. Okay, and this is basically people that are at least holding it for half a year. One of the things you'll notice, with the exception of 2011, the 180-day ROI has the lowest we've ever seen it go is about 0.275. Okay, now I understand that's a pretty bad return on investment in 180 days, but what do you notice? Whenever that happens, whenever it gets down to these levels, it's only a matter of time before we see it sort of shift back the other way. So it's just this is where we come up with the idea that time is on our side, right? You just need to be patient, you need to wait. And one of the better ways that we can look at this is by looking at the 1-year ROI. This was another reason why back in April of 2021, we were talking about how overheated the market was. If you can imagine drawing an imaginary line through this and seeing that, look, we were pretty overheated at the time. Another interesting thing is that the November move, despite the fact that we technically put in a higher high, the 1-year ROI was actually significantly down. Okay, I mean back in March we had about 10x in only 1 year, but in November we were only looking at about a 4 or 5x, so a big difference. And the 1-year ROI right now is actually less than 1. The last time it was less than 1, we went all the way down to about 0.759. If we zoom in here, you can see that this one bottomed over here at around, I guess, 0.712 back in June of 2020. And then most recently, we went all the way down to 0.617. Okay, we have 3 more charts I just want to very briefly look at. And actually, one of the things to remember here with the 1-year ROI is that we don't really know when these major bottoms will occur, but whenever they do occur, they tend to occur somewhere down here. But you can also see back in June of 2020, we came below 1. We ultimately went back up. My guess is that as the market matures, we'll see less downside, but also we'll see less upside too. We'll see diminishing returns. This is something we talked about forever, right? We'll experience diminishing returns. A lot of people don't necessarily like diminishing returns, But I would argue that as the asset class matures, the downside will become less and less. Now, if you look at the 2-year ROI, you can see that it tends to bottom at around 0.3 to 0.4. Okay, so this is basically people who held for at least 2 years. There is a very small window where even 2-year hodlers would have experienced an ROI of less than 1. But you also know that it was only for a few months at a time, and that typically those that are holding for at least 2 years are looking pretty good. The last 2 charts I want to quickly touch on. We have the 3-year ROI, which has hardly ever gone below 1. You can see the only time it went really below 1 was back in November of 2016 and January of 2017. And then we also bounced off of 1 here in December of 2020. So perhaps this is also another useful indicator to show that, look, a 3-year time horizon with Bitcoin historically has been at least seeing, at the very least, at the worst case scenario, has been break even on your investment, but it tends to be a lot higher than that. And actually right now we're sort of hovering around 8 or just below 10x. The last chart is obviously the 4-year ROI. This one's really interesting because up until a few months ago, we had more or less always found our bottom close to a 10x. Of course, we've talked about this before. It will not always stay like that. Just because, again, diminishing returns, you cannot assume that we'll see a 10x every 4 years forever. It's just an unfortunate consequence of diminishing returns. But even still, even after all this time, the lowest ROI that you would really have experienced for those holding Bitcoin for at least 4 years would have been around 2.41x. So, I mean, I know a lot of people aren't getting out of bed for a 2.5x over 4 years, but we're also saying, look, out of all of Bitcoin's history, that's actually been the worst case scenario. Hopefully this perspective provides some, hopefully these charts provide some perspective on how to navigate these markets. Remember, it's a macro game. Don't get too bogged down with the shorter time frames like the 30-day, but focus on things like the 2-year ROI, the 4-year ROI, etc. If you want access to these charts, we have the website sale going on intothecryptoverse.com. That'll run through April 17th. Thank you for tuning in. Subscribe, and I will see you next time. Bye.